We are now live on YouTube and Facebook. Chairman, you have the floor.
Thank you. Good afternoon. Welcome to the meeting of the Audit Committee of the Public Building Commission of Chicago, being held today on June the 26th, 2024 at 1 p.m. 1300 at the Richard J. Daley Center. The acting executive director, Gitteroff, please call the roll.
Thank you, Chairman. Chairman Sachs.
Here.
Commissioner Randall. Here. Chairman, we have a quorum.
Thank you. The first item on the agenda is the approval of the minutes of the November 1st, 2023 Audit Committee meeting. Do I hear a motion?
So moved.
All in favor, indicate by saying aye.
Aye.
All opposed, motion is carried. Commissioner Randall, is there any comments you want to make about the minutes or anything? Because it's a long time since we had.
No. I do not, Mr. Chairman. I don't have any comments at this time.
Thank you. The next item on the agenda is public participation in accordance with the Open Meeting Act. Registered speakers will be allowed 2 minutes to provide comments.
There's no speakers today, Mr. Chairman.
Hearing no participants. The next item on the agenda is the report by the PBC's Director of Finance, Tanya Boucher-Weekly. Tanya, it's nice to see you.
Nice to see you, Commissioner. Good afternoon, Commissioners.
Good afternoon.
Today I am presenting the Public Building Commission of Chicago's draft annual comprehensive financial report, or ACRA, for the fiscal years ended 2023 and 2022. We do anticipate submission of this final report to the GFOA by July 1st, 2024, and that will be considered on time. Our continuity for this year's audit continued with our third year of our term agreement with the external auditors, Deloitte, who were supported by MWB firms Washington, Pittman, and McKeever, as well as Vilma Butler. Last year, we implemented GASB 87 for leases, which required a single year filing and had a net effect on our financials of under $300,000. For this year, we are returning to our comparative 2-year comprehensive financial report that you have within your book today. The report is prepared in accordance with the United States Generally Accepted Accounting Principles and meets all the requirements for the state of Illinois. The PBC believes this report is accurate in all material respects and is presented in a manner which is fairly set forth for the financial position and results of operations for our organization. We work steadily to improve our transparency with our partners, stakeholders, and the public. Periodically, new accounting standards issued within which the Commission is required to evaluate for potential impact on the financial statements. For this year, the PBC evaluated GASB Standard 96 for subscription-based IT agreements. Based on our evaluation, the PBC chose to omit the disclosure related to this GASB statement as its effect was deemed immaterial to our financial statements as a whole. The PBC only has one IT agreement with eBuilder. Deloitte will discuss this further and what our rationale for our omission in their presentation. With that being said, we can now turn our attention to the actual financial that are in your report. We're going to take a look at our condensed summary of financial report on page 3 and 4. Should be in the C section. On these pages,
Yeah.
Okay. So the total assets of the commission have decreased by approximately 11.1 million in 2023. For our 2-year period, 2022 and 2023, you can see that our net assets went from 192.3 million to 181.2 million. The primary decrease in our reduction is related to our investments and our project receivables, which is brought on by our volume of projects. Our revenue and our liabilities will remain in suit with that. For the same 2-year period, our liabilities decreased as well by 8.5 million. And then our assets and our exceeded our liabilities. They exceeded our liabilities by 65.1 million. So we continuously have our net assets as 46.1 million for our capital assets, which are the assets within the daily center. And our 19.1 was restricted for the use by the daily center and for commission's operations. That is what it totals out to be, our 65.1 million in our net position for 2023. Turn the page. Our operating revenue for 2023, which includes our project revenue and our revenue that is available that we receive from our tenant revenues for the daily center. Those are 103.7 million and 111.3 million respectively. Our operating expenses of 105.1 million and 110.5 million for the same years show that we are in line with what our revenues and expenses will project for the amount of volume that we have. They both fluctuate based off of our construction and tenant income. Throughout 2023, the PBC continued to remain steadfast in its mission to deliver high-quality facilities that serve the needs of our communities while fostering our economic growth and sustainability. Our innovative design solutions in the design build of our outlet restaurant area for Joint Public Safety campus, as well as our Salganash Elementary School, were two of our main projects that were completed. We also entered into our WPA street reconstruction on Medill Avenue, where we worked tirelessly to ensure the completion of these diverse projects throughout Chicago. The three unique and distinctive projects that I just spoke on created 53.9 million of our investment across the city for our project revenue for this year. In addition, there were 946 people who earned more than 9.7 million working on these three projects. Each project underscores our dedication to excellence, collaboration, and transparency, the principles that guide our work and strengthen our partnerships with our stakeholders. I further want to go into how our fiscal management demonstrates how the PBC continues to remain committed to our stewardship of the public fund through our exemplary costs. Specifically, for our actual fiscal year 2023 administrative expenses within the PBC, they came in 30% below our budgeted amount that was approved at our annual board meeting. Our actual administrative revenues from the projects and the PM costs exceeded our expenses by 1.0 million, meaning that we were able to recognize a surplus as of 12/31/2023. That continues to remain an example of our commitment to being able to be fiscal responsible and effective to our public service. In conclusion, I would like to personally thank my finance team for all their hard work, as well as our continued relationship with working with Deloitte and their partners. This is all I have for my report today.
Thank you very much. I'll entertain a motion that we accept the report. Do you have any questions?
I do have a question.
Yeah.
On page 3,
Mhm.
it says net position. So from the second column is 2022 and the first column is 2023.
Yes.
Okay. The restricted for daily center, so that number increased. And could you just describe briefly what that number entails?
So the number increased because of our building and capital additions when we do our building improvements on an annual basis. So as we do capital projects, that amount and what we have in AP for invoices that we still have to pay can increase, and it also enhances the lifespan of the daily center. So in 2022, we had less capital projects. As we continue to identify our capital plan, which we bring to you in October, and what we plan to get done in those projects, that will increase what is within our net position, the amount that we have to hold from that to be restricted for the daily center operations within itself.
Thank you. And then the restricted commissions operations, so that's the staff and the function here.
Yes.
That number went down to
Mhm.
2025. Okay,
Yes.
thank you.
And that was that $6 million administrative budget that we approved.
We approved the 8.5, but as we come in with our actuals, it was lower. So this 4.2 aligns with the amount of administrative expenses that we had out the door for last year.
All right, thank you. And
You're
welcome.
I appreciate the detail in the report.
Okay.
So I move to accept the report.
All in favor and to say, saying aye, both of us.
Aye.
Aye. Thank you. Nice work.
Thank you.
Chairman Sachs, it's Alan Truesdale. Good to see you from Deloitte here, and we've got Ally Knipper, our manager, on the engagement with us. So if everyone could open the presentation, the purpose today is for us to go through our required communications in accordance with our professional standards and just give a brief update from the audit perspective for the 2023 audit. If we could turn to page 4, I think you will see our client service team. I'll just start with a few comments before we get into our required communications. Again, everyone, for those of you that don't know me, I'm Alan Truesdell, your lead client service partner, and been working on the PBC with Tanya and this body for quite some time. And Ally is our returning experienced manager who deserves all the credit for this year's audit process. And Monica Allgaier was with me last year, if you remember, but she is out today. So if you take a look at this organization chart, you will see a high level of continuity. And I just wanted to stress, I think that's a benefit that accrues to the relationship and to the process, allowing us to be where we are today. And where we are today is that we expect to issue an unmodified opinion on time with our original targeted date of June 30th. So whether we file on Friday or Monday, I think we will determine, but we are just about ready to go here. Turning to page 5. Page 5, Chairman Sachs.
Okay.
Just an executive summary of some of the select highlights or takeaways from the current year. Our audit scope is the same as it has been in previous years. If you think about the standards that were either implemented in the current year or that are on horizon, nothing in the current year had a significant impact. Tanya mentioned GASB 96, which we did implement this year. Tanya implemented this year. There was one contract that was in scope for that implementation that had a balance sheet only, so a net zero or net dollar value impact to the financial statements that management passed on, to which I did not take any exception to. And the other highlights were the no control deficiencies. So I don't have any, as I've used with this commission before, kind of the stoplight analogy, red light, yellow light, green light, no red light or yellow light here. So I don't have any material weaknesses or significant deficiencies to discuss. So what we'll do here is Ally's going to go through some of our required communications, and then I'll come back on the backside and talk about some of the appendices.
Could you do me a favor, lean back a little bit? Sorry.
Absolutely. So Ally, do you want to cover page? Page 6 is more or less a lead behind. If you want to go ahead and cover some of the required communications, Ally.
Yeah, so that's the step that starts with our responsibility under the generally accepted auditing standards. That's to express an opinion on the financial statements, and as part of that, we consider the internal controls over the preparation of the financial statements, but do not explicitly express an opinion over their operating effectiveness. The other 2 items on here, we do confirm we are independent of the commission, and then the management representation, so we will obtain those from management ahead of issuance. Move to the next slide. This slide gives more detail. I know Alan and Tanya have both already kind of touched on that there were no corrected misstatements that were brought to the attention of management as a result of our audit procedures. And then there is the one uncorrected misstatement, which was determined to be quantitatively and qualitatively insignificant to the financial statements as a whole. And then the significant accounting estimates which we've listed, depreciation, investments, and other revenues. As part of our audit procedures, we've evaluated those management estimates and no indication of management bias as part of our audit procedures. And then this last slide here, the other communications list in detail, our required other communications as well as our other written communications. So from a written communication standpoint, the engagement letter and the planning communications have already been issued. And then, like I mentioned earlier, the management representation letter will be obtained ahead of issuance.
Perfect. So that checks the box in terms of our required communications. I do have some leave behind materials in your presentation to the extent that you have any questions on them, but they are 2 pages dealing with our DEI initiative and some of the metrics that Deloitte likes to hold ourselves accountable for, and some of the investments that we're making with our DEI initiative internally, as well as just a slide around culture and quality that really puts forward Deloitte's core principles around how we execute our audits. So with that, that kind of concludes our required comments. I'll ask if there's any questions, and also Ray, I think you wanted to reflect a little bit on this year's audit as well.
I did have a question.
I do too.
So with respect to GASB statement 96 of subscription-based information technology arrangement, what's the rationale for determining that it was immaterial?
So there's both a quantitative as well as a qualitative assessment that will go through and assess materiality to the users of the financial statements. But if you look at the dollar value involved of the single item that's passed, and what that represents, Kevin Randall, is basically a lease. So last year, Tanya mentioned that you implemented GASB 87, where you put an asset and a liability in the books. This is the same standard, only for IT-based subscription software services.
Gotcha.
And so there was a single contract with 2 years left on the agreement that management decided to pass on, that we also agreed was not quantitatively or qualitatively important to the user of the financials. So quantitative, look at the dollar value that's disclosed. Qualitative, look at things like, does it impact your net position? Does it impact your P&L statement? Or is it a key metric for users of the financial statements? We didn't see that.
Okay. And then you mentioned DEI investments. That's related to your firm you're talking about.
Yes.
Okay, so I would be interested in seeing that. Thank you.
Thank you.
Yeah, I have 2 questions. One, have you ever looked at any government agency like ours anywhere in the country and looked at any management ideas that they may have? I know, for instance, Texas has them. I know New York is working on them. You have a national firm. And if you don't know today, I'd appreciate if you, because there is a demand in the society now to create commissions like ours, because of the failure of going to market with just on the ballot. Last November, there was huge failure of original obligation bonds around the country, and so they're looking for other ways. And so I would appreciate if you would.
I could do some benchmarking for you if you'd like, by some
Yes,
major
that's exactly
geographic
what I'm looking.
geographies, and happy to share that with you.
The
And
second-
we do practice across the country and do, audits of states, cities, counties, local authorities.
Because we're not in a government industry, we're a government building developer.
That's a general contractor,
And
basically.
it's a general contract.
Yeah, so happy
As
to
our
happy to
general
look into that
counsel
for you,
knows
Chairman
very
Sachs.
well. And maybe that's another way to look at it on what they're doing. But it would be interesting to see costs. And it would be very interesting to see how they have been bidding the work. Whether it's design, build, or is it still bidding? And that would be very helpful for us to have more information on the industry as it relates to what we do.
Sure. Happy to assist. Thank you.
Thank you. May I have a few
Sure.
thoughts?
Sure.
Thank you, Chairman. Just a few thoughts for the record. Tanya, Ellen, Ally, Monica, whoever Monica's at.
I won't tell you.
We'll benchmark that as well.
Yeah, exactly.
So I just wanted to say thank you, because this is it's a big effort. Tanya, your leadership is unwavering. So thank you to everybody for doing that. And then Chairman and Commissioner Randall, as we recognize the successful completion of this audit, I do have to take a moment just to acknowledge our collective positive impact on the communities that we work in. Assure you both and our board that we will remain committed regarding these investments and diversity in our workforce and opportunities for residents throughout the communities that we work in. As we've been reporting to our board throughout 2024, we continue and we remain committed to enhance all of our partnerships with all of our client partners. And I'm going to name a few of them because I think it's important. It's important to me. 2FM, PSA, CDOT, city colleges, libraries, the planning department, police, fire, park district, forest preserve of Cook County, and CPS, just to name a few. And the reason for that is we continue to communicate regarding our ability for new construction, renovation work, infrastructure improvements. This diverse portfolio is what comprises of all of our work and the investments that we're making throughout all the communities that we live and work in. We'll continue to communicate with all of our municipal partners, specifically regarding that capacity, our capacity to plan, Chairman, to your point, to plan and to design, to construct, to manage facilities and infrastructure projects everywhere that we live. We're going to embrace any opportunity that we have to stretch those boundaries of what it means to be a responsible and honest municipal development agency. That is in our core. Our work's already changing and improving the neighborhoods by creating jobs, contracting opportunities, and all these increased investments everywhere. We look forward to providing great public buildings and spaces that foster sustainability within all these communities. So Chairman and Commissioner, everybody in the room, thank you for the guidance. Thank you for the leadership. And we look forward to our journey as we move forward. That's all I wanted to say today. Thank you.
Well, thank you. I would also like to compliment our council. They're extremely important. We do not have, I see other construction as a banker, and I must say that it's the litigation that is out there in other areas and how well they defended us, I think requires a compliment in the minutes.
Thank you, Commissioner. It's our honor to continue to serve the Public Building Commission. And we're very proud of it. And our history is the only glory of our service to the commission and to the public.
Well, you know the subject, and we're unique,
We are very unique.
and for both of you, but principally, that's where the trouble comes. And so on behalf of our fellow commissioners, I think the compliment is well earned.
Thank you.
Thank you.
Is there any other business to come?
No.
Well, thank you all.
We need a motion.
The motion?
for that,
Yeah.
Move to accept the report.
Is there, we don't have a second, so I'll second it and then we'll vote.
Aye.
Aye. Well done.
Thank you.
Motion to adjourn.
And a motion to adjourn.
Oh, motion to adjourn.
So moved.
I guess I'm really getting old. I didn't hear your voice.
All those in favor?
All in favor,
Aye.
indicate saying.